All right, welcome everyone to the weekly meeting. I'm not sure why that waiting room thing appeared, so I must have clicked something wrong in Zoom, so not sure why that did that though. So, our plan for today, we'll go through the feedback tracker. I'm going to go through and show you guys how to create trade alerts for that state 2 target 3. And then, Shawn's going to go through a bunch of the earnings trades, and I think he has a non-directional trade too that he's going to go over. And I'll also do the market update too. So let's just kind of dive into the feedback tracker. So this one at Pushpa, we're still working on the right to left in the virtual portfolio. I don't think we're going to do a kill switch. It's not a bad idea, but that won't be anytime soon. This is going to be a long time to create these. So basically what, Sadir's asking for is, we're looking for like spikes in open interest and things like that. So right now we let people know, cumulative, like Tesla has a high open interest compared to normal or something like that. So this will, when this is done, this will have specific strikes and expirations where there's a huge, change in open interest or volume, kind of like, if you watch that CNBC, like halftime, where they're talking about things like that, that'll be automatically scanned in the system when that's done. So it's a good thing Gail just joined. Yeah, I was seeing the state modeling, these averages aren't populating, average days, average move for some reason. So Gail, I'll have the programmers fix that. That should be a quick one.
Yeah, no problem.
And what is this one? Screen for state transition.
Yeah, you know how we have, or Shawn gave us that whole script. It would be good to know that something entered a state 2 transition and how many days it's in it. This is like, I guess, like, if you could do it entered state 2 and it's been in the last 2 days, up to a week, something like that. Because I missed a couple last week that were putting that it entered state 2, target 3 not met, and I missed a couple of them. Damn, they paid off in a couple days. So if you don't catch it right away on those daily alerts. So I just thought I threw that out there. I don't know if it's worthy or not. So
I'm trying to understand exactly. So you're just looking for, because you can go back in the calendar and look, for the state transition.
Yeah, if you could just screen for something that entered state 2 transitions and it's still in there after within 5 days, something like that. Do it as part of the screening process.
Oh, okay.
Yeah, as part of the screening process is what I'm saying.
Well, like in the screener, and I don't know.
While you're in there, you can tell me what it really means. Exit after 60 days. Does that mean it typically has stayed in there 60 days and then left, or what?
No, that's just like after 60 days that, you'll get out of the trade.
Oh, okay.
No matter what.
Oh, okay. Gotcha.
Yeah.
Gotcha. Yep. Okay.
So in the custom, hey, Shawn, can you message Reshma and just let her know the system's kind of slow?
Yeah, we'll do.
So when you go in that state modeling, state target, or you can just do like state 2,
Right.
not met. So when you go in there, it'll tell you when it entered. So
Okay. Would you go pop up that again? I had a question when you're popping that. It said state 2. Okay, your state 2 not met. Does that mean it hasn't met state 2?
it hasn't met target 3. It's in
Okay, so
state
that
2.
not met has to do with the target. Okay.
Yeah, this is all for the targets.
Okay,
So,
gotcha.
so you can find ones that have met it, you know.
And then
over-
and you're looking at the entry date to see, okay, that tells you where it entered. So, you get, okay, it might have just entered there and you got some room.
Yeah, so I mean, you'd be able to, look back like a week or whatever.
Okay, that's good. That's good. I can do
That's
that.
probably the only way right now that I think you can do it. So,
Okay. I can work with that. I'll try that.
yeah, okay.
Thank you.
Yeah, this waiting room thing's annoying. I keep getting pop-ups, so. Okay, so that was it for feedback. Obviously, thanks for everyone, providing that. Please keep the ideas coming. I do want to let you guys know that we have been working on expanding our stock universe. So right now, Shawn and I are in testing, and we're going to move up to 4,000 symbols. So it's going to be pretty much everything that's optionable in the U.S. markets. So it's a little over 4,000 symbols. So, that'll include like the state modeling and everything. So you'll be able to use them throughout the system. I was trying to think of a symbol that we don't have. That you guys don't see, so like Spotify. So we'll have a lot more, because right now, I mean, it's around like 1,000, so times 4 on, so you'll have some more work to do, when you're going through your transitions. It's going to be a lot more, so I'm not exactly sure when we'll have all those released, but it's at the end stage here. Hopefully the system behaves here. So so now we have like Spotify in there, and it's done all the modeling, and so it's going to be a lot more coming in the very near future here. Okay, so just want to go through.
Hey, Josh?
Yep.
Since we're into the last quarter, where are you with the intraday trading results?
Yeah, that'll be after the stocks get released. So I believe that, because we'll need the new server for that. So maybe fourth quarter, maybe by the end of the year. Hopefully, I can't say, but the process was release, get 4,000 symbols, and then I don't know if we'll go like the full market. We may just stick with all optionable, and then from there it'd be intraday. The 20-minute data, I think, would be the next big one out there. So once we have that, 4,000, then I would think that'd be the next thing we're going to focus on as far as programmers and things like that. Okay, so pulling up here. So we're pretty much same, very close, I think, to last week. Yeah, we dropped, 5% in state 1. State 8's gone up a little bit as far as the market pulse. So, state 8's, once the, kind of like the high bar for those is, 40, 50, it can even get up to 60s. I mean, if it's like a real crisis, it'll get real high, but, like typically the state 1s will be 45 is kind of the overbought line, and that's where it was, when things turned around. So if we go in and we'll look, evaluate SPX and the Russell. Come on. So, last week we were right in here, and, I didn't say it was definitely going to bounce, but I said if it's going to bounce, it'll be right at that target 3. So you can see the low was 3209.45. So it just hit that target 3 and then bounced up here. So that's definitely one of the key things, and we're going to do a little exercise with state 2 target 3 today. One of the key things that we found in modeling with those targets is that is a critical level as far as like when things like pullbacks turn around. That's usually that spot right there. So it happened again. And we laid out the probabilities. 65% of the time it's going to go back into state 1 from here. So if market, I think it's up, gets above those stops, I would assume, within a day or two, it's going to be, unless it really turns back down, it'll go back into state 1. I don't know, is the market up today? I didn't even have time to look. You guys are quiet. Yeah, it's up big.
Yeah, just slightly. Yeah.
Okay. All right. So, so that's what I'd look for. As long as it holds above those stop losses, it'll go back into state 1. The Russell. Yeah, it did pretty much the same thing. Touched that target 3 and then took off. It's not up to the stop losses yet as of yesterday. It may be close on that. So that'd be a key level. I'd be watching those stop losses. If you can get through that, look for it to get back into state 1, but that could be a resistance level as far as the Russell. But right now it's just when it bounces off that target 3 like that, especially in unison, pretty much all the indices did that. That's pretty strong bullish indicator. So it's also going to pull up, just kind of look at the SMA. Hopefully this isn't going to be slow today. All right. So it didn't really get down close to it. So, obviously, if we get back up to the highs, that, we could keep going higher. So, your next big level is going to be those highs up there. But yeah, we didn't really touch down there too close. So I'll do the Fibonacci too here.
Hey, Josh, what's the importance of the SMA 200 versus 100 or 50?
That's just, everyone uses that as like, just like a critical level for like long-term support. Whereas the shorter term ones are, like short-term. Okay. She said, yeah, I have to restart real quick. Yeah, so it's just the time frame. So, the 200 is kind of, I would say, the max that people look at, and it's just like a very long-term, kind of support level. So when that thing gets broken, it could be, get pretty ugly. So, and if you just kind of look through here, just on this 1 year chart, when it broke through, it tried to get back and then failed. And then once it got back up above, it tested, and then took off. So it's just showing you like it's a very critical indicator for long-term type of movements. Does that make sense?
Well, when you're saying long term, so if we're doing like 60 days or less, would that really make it, wouldn't it be better to use a lower time frame?
I mean, yeah, you can look at them and things like that. I mean, this is just kind of like, I mean, if you look at this, if it's above the 200, it's kind of, it's generally bullish. If it's below, it's generally bearish until, obviously until you find a top or bottom. But, like Winslow uses this, to like screen out those pre-runners. So like if anything's below the 200, he's not going to trade the bullish pre-runner. If it's above, then, that's just like a kind of quick snapshot of the general trend. If you look at state modeling, you look at 200-day SMA, that's two kind of trend indicators, where it is relative to those indicators. So.
Okay.
All right. Let me just log out, log in. Hopefully it's quick. Okay, so I put that back on the share drive. I put that state 2 target 3 document. So what I was going to do is just kind of show you, and I'm going to do a very in-depth analysis for this. But what I want to show you, if we're going to create, back test in our system, and the ultimate goal here, before I do that, the ultimate goal is to find a model that feeds you trades that will come into your daily alerts. So these studies auto-populate. So if we do the state 2 target 3 strategy, anytime, and we're going to kind of whittle the list down, anytime it comes in and meets that criteria, so you don't have to watch it yourself. Like Microsoft, hits target 3 and state 2, you'll get an alert for that trade. So it'll do all the watching for you. And, it gives you the strikes and everything like that. So it's very useful, to be able to create these alerts. And I think it's something that you guys should definitely apply. And I'll kind of, Shawn gave you the document. So I'm going to kind of breeze through the first part here on creating the strategy in the back test.
And Josh, can
Yep.
I ask, when you bring up the alerts and it has in the bracket, years had one, what is that? What's the significance of that? The alerts? It brackets, it gives you what the trade is, where it came from, and it puts a bracket like one. Mine had 2s in it, so.
Let me see.
Okay. See that? Yeah, it says yours is bracketed 1. So what does that mean? Is that the days it's been in there or something? Is that maybe?
No.
Okay. Okay.
Oh, it's the number of options. So this one has 2. It's a bull call.
Oh, okay. Okay. Well, that's okay.
And that
Mine
one,
always has 2, but it's always just a call because that's what I was screening for, is long calls. Okay.
that's weird. That's the only thing I can think of.
Okay. All right.
Yeah. I don't know. I'll have to ask.
Could it be the current state, because this is state 2, the other one was state 1?
Was it? Yeah.
Oh, go ahead.
Yeah, that's got to be it. Russ figured it out.
Okay. It's the
It's
current
the
state that it's in right now?
Yeah.
Okay. So you had some that were current that are in a current state one, weren't you screening for two though?
No, I have multiple. I have multiples in
You got
there.
multiple, so,
Yeah,
gotcha.
but it's
Okay.
kind of nice because like all these bullish
Yeah,
runners are populating, and it so I know
Yes.
that it's in state one, state.
okay. All right, good, gotcha.
Okay, so so I think everyone's familiar with the wizard. So basically, we're just going in and creating the state targets. State 2, net today, target 3. All right, and then we just give it a name. Met today. And we go next. And we do an exit signal. So some people are confused about this. I just do pretty much every time a time stop. So what that does is just says, okay, after every entry, it'll close the trade 100 days later or something like that. So it just gives you a big chunk of time, and you're going to manage the trade via your stop loss and profit target. Or you can put other, indicators in there. But I just use these time stops all the time. And I probably already have that one name. So next. So, so that's our entry and exit, and they should populate down here. So the testing range, so I'm going to do an abbreviated one, for this like instruction, but what I've done in the system already is, and my goal here is to finish these, by the end of the week. So my organizer, I'll show you here. So I did one, for all the liquid symbols, the liquid options since 2010. So there's 3,000 trades. So, so I'll go through and do that testing on them. Okay, someone's loud. I'll go through and do that testing, and I'll send you guys kind of like we have in here with the best trades. So, I'll give you the raw data, and then I'll just whittle it down to the best trades. So the reason we want to do that is we can create a stock list of anything that wins over 90% or 80, or if you just want the 100% ones, you can create that stock list of all those symbols from the testing, and then you go back in and run that, create another back test, and then you create an alert for all those symbols. So you'd have a custom stock list. And that's all optionable. So that's the 4,000. I'm not going to touch that right now. So that's the end goal here, is where we can create our stock list based off of the previous testing, where, and you guys can decide if you want, anything over 80, anything over 90, or just 100%, or whatever you want. So you'll create that stock list, run the back test, and then create the alerts just for those symbols and not for everything. So you wouldn't get alerts on, ones that have a 0% win rate. Okay, so state 2. Is that clear for everyone?
Not exactly.
Okay, that's why I wanted to show you. So, this one I'll just run one, since 19, and I'll give you the big data set once I'm done, probably by Friday, I think. So we're just testing the last 2 years for the state 2 target 3 and all the liquid options. So luckily I'm prepared And I already did that back test, so I can pull it up for you. So that's a state 2, target 3 met today. So if we go in, and I did the bull put and the long call. So they're pretty good win percentages here, and I'll do one, for a bull call, long call, and the bull put. So I'll do 3 for that big list, the 3,000. So depending on, I know some people like the calls, some people, not many people like the calls, maybe just Gail. And then, a lot of people like the bull puts or the bull calls. So you'll be able to create independent lists for each one of those. So when we go in here, and we'll just take the long calls. So when there's this little expand button here. So in there, it gives you breakdowns by, these different topics, grade. Come on. Apparently the grade's slow right now.
Josh, I don't know if I've seen all those things up on top. Hedge, compare, metrics.
Oh yeah, you're not gonna have all those.
Okay.
Yeah. Not yet. So this breaks everything down by grade. You can do it by year, and the one that I think is the best is group by symbol. So we can sort these, like any of these ones that are losing money, we wouldn't want to create alerts for those, right? Well, at least I wouldn't. If it's like, this isn't a huge data set, but if there's 3, I wouldn't include OLED in any kind of alert that I wanted. So if we sort this by percentage, and then over here we have this download functionality that you guys all have now.
Yay.
Yeah, so if you click that, and you just save it. Yes. So once we open that up, so just like kind of how we did in the with the earnings trades, we can just cut out all the junk at the bottom here and eliminate all these unnecessary alerts. All right. And then, so from here, all you have to do is, so if I delete all these and, save it as a different file. Good Lord. I don't know why they change everything with Microsoft.
Mm.
So state 2, target 3, stock list. Okay, so now this is the format, to upload a stock list. All you need is symbol and name, right? So when I go into, and this is why I'm doing it, it's recorded so you guys can walk through this part. So I went into organizer and stock list. So if we want to create a new one, we just hit that add new. Then we hit the import and we upload our file that we just created, that state 2 target 3 stock list. So that's all the symbols. We give it a name, state 2 target 3 stock list. We just hit create. So now it, 160 stocks versus 300 something. So we whittled it down there. So once we have that stock list, then we go back into the wizard and do the same backtest, except for instead of liquid options, we'd use that stock list. Is everyone following so far? Anyone not following?
I don't really follow the concept.
Okay, so we go back in, using the same criteria that we had before. Time stop, state 2, target 3 met, and then we put in our time frame. So now we just, instead of doing the liquid, now we created our own over here, state 2, target 3. So these are all the winners, right? And let me just move the date here.
Yeah, I was gonna say, don't go back to 2007.
Yeah, I mean, my list will. I mean, my list will go back to 2010.
Okay. Mm-hmm.
That I'll put into the share drive there.
Josh, can I ask you one thing right here where you're at? Now,
Yeah.
I've already done this. And so I've got my stocks and I've already done the entry and exit dates.
Mhm.
Now I could just run to do different strategies against that entry and against that file that was already created for those entry and exit dates, right? So I wouldn't have to go back. I mean, I've got the stock list that I want. I don't have to go back and recreate the entry and exit dates for them. I've already got that created, but I just did it for a call. But I could go back and run this for bull calls, things like that, right?
Yeah. Yeah.
Okay, good. Okay.
Yeah.
Okay, because this is the longest step right here is
Yeah.
creating this entry and exit dates. Okay. All
Right. So now we have, instead of the state 2, target 3 met today, I just put in the winners. So now it'll be submitted here, and then we'll get, yeah, that's the one I already did. That's the big one. So once that's done, it'll come into the entry exit dates, and then we can finish the process. And I think you guys are familiar with that, where you just, you know, you have your trade rules where you say long call or bull call, and then you run the back test. So once we have that, with our, and we'll just go off this one because it's still processing. So if this was that state 2, target 3 met today winners, once we ran that long call, then we'd just click over here and hit that daily alert. So now, you know, you don't really want to give it an expiration.
You can't.
You can put one in there if you want to. You can name it whatever you want to. But you know, once I hit that activate, now it's going to take that stock list and screen it every single day to see, you know, when that state 2, target 3 met, and it'll populate the trade for me. So you can select. You can do both of these too. So, you know, if you're doing this may be, because I already did the long call, then you can put in like bull put. So that answers your question, Gail. So if I did another one here for bull call, I could create 3 alerts
Right.
off
Okay.
those.
Okay, good. Good.
So that's the process. Is there questions on how to do that?
And I'll add to the group. I mean, I went through this whole thing about 2 weeks ago, something like that. Created it. I've had 4 alerts so far. 2 of them I caught in time, and I put them in. And I've just closed them both. And one I got a 50% profit. The other one I got a 25% profit. And the 2 I realized I missed because this came up last week. I went and looked at them on the charts. I went, you know, they would have paid a 25% profit too. So I mean, it's a good trade, real good trade.
Yeah, and I mean, the key is, you know, obviously the market's bounced off of state 2, target 3. So, you know, if they had fallen through, the trades may not have done as well. But, yeah, we knew that key level was coming in. And, you know, you have to take advantage when these things do get down around that level. You know, I would say it's a risk reward and usually worth, you know, unless it's, you know, another pandemic starting or something. I would say most of the time you want to take that risk at that point for a turnaround. You know, unless, you know, fundamental things are happening in the economy. So, okay, so, you know, I'll go in there and populate. It'll be, you know, the state 2 target 3 spreadsheet, very similar to these with like the raw data, the 80%, and then kind of best trade. So I'll collate all of that into one spreadsheet. So once you have that, you'll be able to modify it as you know, see fit. You know, if you want to only do like the 90% trades, and obviously you can just delete anything under 90 and create a stock list for those symbols that are 90, 100, or whatever. So once you create that stock list, it's just that process that, you know, through the wizards, you know, going through that process once and then, you know, creating the alert, and then you'll have it forever. So just want to make sure you guys are clear on that before we move forward. And, you know, once it's done, we can review it next week if you guys have problems going through it. You can always reach out to me or Shawn too. So, but yeah, like Gail said, and you know, I think Shawn's the one that discovered this state 2 target 3 back in 17. So yeah, I mean, it's the basis for a lot of studies, but the studies don't catch everything. So, because we also have other indicators on there, you know, like Keltner and things like that. So this will just give you everything that hit state 2 target 3, which I think you would, I mean, I would definitely want to look at, you know, okay, what hit target 3 for state 2. Every day I'd want to be able to see that. And that's what we're building here for you guys.
Josh, that's going to be in the daily email, right?
You'll get an email that you have an alert. So it'll be separate from the studies, but it'll be an email. If you get a daily alert, you'll get an email saying, yes, you got to click on it and it'll take you there to the trade. But yeah, it'll send an email each night that something does hit.
But we have to set that up
No.
ourselves? No.
Yeah, you do by creating that alert here, like I just showed you here.
Yeah, okay.
Yeah. So once this is created, and I created 2 of them here. So anytime these criteria are met, it'll populate an email at night saying this one, you know, whatever, Microsoft or Apple hit state 2 target 3. So you'll get an email each night that any of these occurrences happen.
Yeah, it's your classic buy the dip in a bull market.
Yep. Yep, that's your class. Exactly
Thanks.
right.
Yep, thanks.
Okay.
Hey, real quick, Josh, can you just pull up run 2 and just show me like 2 of the most recent losers? I just want to write them down for a second. Just the ones that hadn't worked. It was 2 of the most recent ones.
Shawn, you're always focused on the negative. Well, that one's still going.
The BMRN.
They're still going.
Oh, those are still going. Okay, sorry.
This one's not looking good.
All right.
Okay, when you say it's still going, does that mean because it has exit date in there? Is that what that means?
Yeah, so I ran this a few days ago.
Okay, okay,
Yeah, so I ran this on the 25th,
okay.
I believe. And so that'll be the last trade date. So, so when I sort this, it'll say, these are basically all the active ones. You know,
Okay.
anything with a 25th. So those are all still active, and you can see over here exit date. So that's just, like this one just started,
Okay.
BDX. But
Okay.
anything else before that 25th is either, expired or, hit the profit target.
Profit target. Okay.
So this would be this PHM would be a loser, Shawn, and I think you can call this one a loser too.
All right, yeah, that's cool. Just check them out. Thanks.
Shawn,
Yes.
Josh, when you're saying exit date, it says that the entry date is 24 and the exit date is the 25th. So how is it already still going?
Well, nothing's been met. So, and this was the last date that was when this test was ran. So if I rerun it, for 8:30 or whatever, I mean, run it for now, it'll go to 9:30. So this would be 8:24 up until, the exit date would be 9:30. So this simulated trade, it entered on the 24th. So it hasn't, it's been one day.
Okay.
Two trading days or whatever. So, so this, unless it's hit the profit target, it's still an active trade as of, this data.
So is that stock still in that list? I mean, we really wouldn't want it because it didn't really provide anything.
What's that?
I mean, if it's still running, that wouldn't be on our list.
Well, this one would show up as a loser right currently.
I mean, currently, but on the stock list, would that be part of it? The CCI or the
Yeah.
BDX?
Yeah. Yeah. But I mean, we're talking 3,000 trades. So, a couple like this isn't really going to be really a factor, I would say. Does that make sense?
Well, to me, I would say they shouldn't be on the stock list.
Well, I mean, if BDX has 10 trades, and it, this is one of them, and it won 8, is 8-1 before this trade, you would want it on the stock list, right? Or, if this one is winning, but it was 0-5 before this, you would want it removed from the stock list. So I just don't think it'll have the, if there's a few trades that are still active, I just don't think it'll have much of an impact on there. But I can include those ones. I can show you next week, the ones that were still active as of that testing, so you can make a decision on that.
Okay.
Okay. Any other questions about this process? No? Okay. Okay, so I'll follow up. Yep.
One other question.
Mhm.
Is there a way of telling you what's the average days in trade for all of them?
Yeah, it's up here for the big run.
Okay.
It's 23. Okay. So I'll populate that spreadsheet for you guys, and then you can try and apply that for next week. And I mean, so the reason we're kind of going through this is, one, it's a really good strategy. Like it's, two is, this is kind of like why this system was initially built, is so that you can go in and create your own strategies. You can filter out, the winners and losers, and then you can populate, just the ones that have done well, so that you get alerts on them, and just you basically build up this like whole, kind of group of good strategies that are automatically searching and populating for you. So that this would be, you know, a good one to include in that list. And I'm sure you guys can dream up more ones, you know, just kind of like the studies. So this would be, this is like another study, you know, but you're kind of learning how to tailor it to what you want. And you can take those, I mean, on that front, you can take the studies and, you know, tailor those how you want them to, because you know the criteria, and you can, you know, whittle that stock list down to just the ones that you want to trade, and you can create alerts for those too. So that's kind of the, I would say, the next step in a lot of people's process here is, you know, we have all these single page kind of easy to do screeners, and this is just getting a little more advanced and a little more tailored for, you know, how each person wants to trade, you know, because I know some people want to trade one way or a different trade setup. And I mean, you can change the, you know, the bull call strikes to whatever you want and test those. And then, you know, so there's lots of options on what you can do, and, you know, trying to optimize trades and, you know, find a better trade. So I think sorry, a second. Okay. So any questions on that? I think Shawn is going to be right back. He's next up. Is there
I'm
any?
here.
Okay. I was going to go in a general, but yeah, okay. All right. So you ready, Shawn?
Yeah. Yeah, you can share, and I'll share my screen. All right, so how's everybody doing today? What I did was, real quick, was I wanted to, give me 1 second, let me populate that. Should be able to see my dashboard now. What I was looking up while Josh was showing some of those losers is what came to my attention, or what I started thinking about was, you know, that state 2 target 3 is the basic, you know, not the basic, but just one of the things you can use state modeling for. So if you do see some trades like that, and that trade obviously looks really good, but just trying to figure out other ways maybe to add an additional screener or add some other additional indicator on top of that, and then you might be able to, you know, optimize those trades, if you will. So what I did was I just looked at some of those symbols and pulled them up on a chart and just tried to see, you know, based on like the daily, like a moving average, simple moving average, or some other indicator like that, to see if I could see a real quick comparison between the two of, you know, maybe they were below the 200-day or above it, and just see if there's another additional indicator we could add on top of that to make that list better, for the lack of a better word, you know. None of those really matching up in the short time I had to look at it, but I just wanted to let you know that, you know, you can always take that stock list and add additional screeners on top of it to see if you can take that list down from 160 to maybe a better list of what you might want to be looking at. But when you're talking about state 2 target 3 met and only 160 symbols or so, it's not like those are going to be hit every week, because you're talking about a specific state and target 3, which is a specific bearish target too. So it's not going to happen all that often, but if you did want to do that, always be thinking of ways that you might be able to, you know, match your profile a little bit better of what you're wanting to trade. So that's what I was looking at with those couple symbols there, but I didn't find anything, so that was a lose on my part. But I did want to talk about a couple things today. I mean, you know, we had that earnings plan webinar a couple weeks back, so, you know, Josh and I are trying to work on ways to see if we can make, you know, the list a little bit more usable via what we have here. This is a list that, you know, I downloaded today. You know, I pulled in the earnings plan list. I downloaded the PDF, and, you know, unfortunately we can't sort, you know, by some of these different fields right here, the bullish pre-runner or the bearish pre-runner fields, but we can sort by, I think, symbol now and maybe the earnings date. So what we're trying to do is take this file and export it over to an Excel file, and we might have talked about this previously, but export this list to an Excel file so then I can sort this bullish pre-runner list and find the list in a specific date order. Sudhir had done that using like a PDF to Excel online converter, and some of those converters in different websites are free. I tried to look them up to see if there was any negative to actually using those sites. The only thing that came to mind was you are, taking a file such as this, uploading it to an external website, and then they're converting it, and then you're downloading it back from that particular website. So some people had mentioned you have to be obviously really careful because you could be downloading some viruses onto your computer as well when you're doing something like that. So, you can use Adobe. I don't have that Adobe extension on this one here, but you can use like an Adobe extension to be able to export it, export your PDF to like an Excel version if you wanted to do that. So has anybody done that or wanted to do that and hasn't been able to do that? Would anybody think that would be useful to have that?
I think it might be useful, but I haven't tried it. Just
Yeah. I have that. I have that extension on Adobe anyway. It's a yearly fee that I think I pay, and every time it comes up, I go, "What is this for?" Because I rarely use it, but I have used it in the last couple of weeks anyway. So
Okay.
So
Go ahead.
I'd recommend it.
Yeah, and I'm getting one now. I've in contact with our IT department, and we have it through Delphian to where she can download. I just have to connect with her, and she has to log into my computer and give it to me. And once you can, if you guys want it, and we sort it out a little bit, I'll be able to send it out to you in an Excel format. Unfortunately, we learned from the coding group that particular page within Delphian on our program doesn't have that converter, I guess, embedded. So we only have access to that PDF file right now, but he is adding some different pages into that particular portion of the site. And in those pages, we should be able to do both of them. So it should be coming. One thing to know, like Sudhir had taken, maybe this file that I'm showing here is from today, but if the file was from last week, these earnings dates could have changed. So in the system, if it's a file from last week that you downloaded, Delta could have changed their earnings from 10/8 to 10/10, and you wouldn't know that because you're looking at an old file. So if you go back in the system today, pulled up that earnings plan, and then uploaded the new PDF earnings plan file, the date should be reflective of what we as of current, as of the day you actually download that file. So just be careful if you're using an older file. Some of those earnings dates might not have updated for that particular file, so you might want to go back in and re-update it. So I think it's useful. I mean, I was looking at this with Pushpa and somebody else the other day, and I think to get to some of the other, if you're looking at page 2, page 3, maybe, you can see we're getting into, on page 3, we're already getting into some of these that would have been valid for today. Or, if you go onto another page, you're going to see some that I thought we went pretty far out. I don't see any here. But, just because the earnings dates is on page 2, you still might need to look at page 3 or page 4 to find some of these bullish pre-runners that might be valid, because some of them do go out 20 days ahead of the earnings release date. So just something to make note of. We're trying to, make that a little bit easier to use. We wanted to be able to sort by this, but that functionality we haven't had as of yet to sort by the bullish pre-runner. So I think the Excel is going to be the way to kind of help do that. But if anybody else has any other comments as well, or constructive criticism, they kind of a way to sort that or look at this a little bit better, please let me know. So
Hey, Shawn?
Yeah.
When you're saying bullish pre-runners and you have a stock symbol there, how do you know what the win percent is or profit on that particular one?
Right. Yeah, you don't on this one. This is just kind of giving you the idea of when it's coming about. So you can do it a couple different ways. I mean, if you have the alert added, if you're in the system and you added the actual alert, in there based on that earnings plan, you can have the alert that's going to populate for you. You can look at it that way. Or sometimes what I've been doing too is I've been going into either going into the save file that Josh has within the share drive and looking them up there. So to kind of doing like a cross reference between the two, or I might even save the stock list and then pull that stock list back up in my calendar and kind of rerun it and relook at it that way, just to verify that it's a trade that I want to do. So you can always look up here. So if you looked on the bullish pre-runner, you know, you kind of have to cross-reference those symbols, right? So that's the only thing that I haven't found a good process for myself as of yet to be able to cross-reference all the information. So that's kind of why I'm bringing it up, because, you know, I might be the only one having that issue and nobody else is, and that's great. I would just wish everybody would tell me kind of how they do it, and then I might be able to resolve it a little bit. So, but yeah, I would pull up, so I might pull up this plan here, and if I've added the alerts, then the alert will give me the trade. But if the trade looks relative to something that I want to do, meaning the cost-wise or the risk-wise, then I'll come back in and I'll either try to find that symbol on the earnings trade bullish pre-runner spreadsheet that Josh had in the Google Drive, or I'll pull it up in the calendar. Is there any other route that other people might take?
Shawn, I just take the spreadsheet that Josh did, the best trades,
Right.
and I threw it into, I finally put Excel back on my newer Windows 10 machine. I have an old 2007 version.
Mhm.
And then I build out the spreadsheet, the analysis from there. And it's, you know, the real issue is the earnings date, getting that correct. Although on some of these that you really want to do, the summary, the wins over 80% has it alphabetically, so there's more than one decent day or days before the earnings that you're going to get it in. So it's a little, I don't know. I wish those companies were more obedient about when the actual earnings date is. That's the time I'm spending most my time every day figuring out, well, is CNBC right? Is Zacks right? Is Stock Screener right? Is Delphian right? Is Schwab right? So I don't know. It's
Right.
just, that's all.
And yeah, and I agree with you. You know, I mean, Josh, Shook, and myself, you know, I mean, we worked on that earnings plan to kind of get it out there and let everyone use it, right? I mean, you have access to great information on the earnings plan, but when I start trying to run the analysis to actually put the trades in my account and be ready to trade them ahead of time, the past couple of days I've kind of been getting lost, right? Like I've been like, all right, well, what am I doing? Where am I at? So if I'm getting to that point and having to think a lot more about it, I just feel that there's probably many of you that might be kind of running through that same
Right. And
process.
the other thing that I did is I said, okay, which one of these silly things can I get 50% profit out of? And so I have a short list of about 12 that I can get 50 or even more. So those are the ones I really want to do because the money management is better than 25% and risking whatever you're going to risk. So, and I've got, what do I have? Like, you know, Pulte and Granger's and Comcast is great, but Facebook and Google haven't announced yet. PayPal is kind of shitty. They haven't announced. I don't know, Deck is, anyway. So it's like you sort of want to do the really good ones, but then you don't want to throw away the 25%ers because the bid-ask spread to mid, you know, you can get a good price in there. It's like a couple of percent.
Right.
So you can get a good trade in and out. So it's, I don't know, it's just what it is. It's part of trading, I guess.
Yeah, and I think what you're doing, I mean, you know, taking this list of either over 80% or taking the list of the best trades, I mean, you know, we can download this list. You can download it to your computer. And like Josh had shown, you know, you can copy this symbol list row or column here, excuse me, and add that to a stock list and then put that stock list into your system. And then, you know, like you said, run kind of the bullish pre-runner backtest on that and then, you know, save them all. Or if you find some like these, you know, maybe the top 20 that are above, you know, 90% or above 100 or at 100%, and then just make sure you've added those alerts to your, you know, to your daily alerts. So when they do come out, you're ready to trade those. And you just might need to have a separate file so you can cross-reference and say, okay, well, you know, Abbott here is 80% winner. I put the alert on there. So, you know, I'm going to go with the trader. Maybe I'm only looking for ones that are above 90%. So, you know, that might be the way to do it. Copy these symbols, put them in their own stock list within the system. but, you know, use that earnings plan that we set up here to be able to come in here and quickly add, you know, quickly add Citigroup here, you know, to your daily alert. So you have it ready to roll whenever the daily alert comes out.
Yeah, I guess so. I don't do that, but
Yeah, I mean, and you can do it your way. I mean, you can put the list in there and then run the test and then just create your own daily alert that way, you know.
yeah, I'm an Excel guy, so now that I have it, I just do that. But
Just do it that way. Yeah. Yeah.
the other thing is I've not done certain things because the bid-ask spread is so large, even though I made money the last time. And so
Right.
I'm getting kind of fussy on that. And so I don't know.
Yeah, I think, I mean, it depends, in my opinion, you know, and I think we spoke about it before. I mean, you want to pay attention to your bid-ask spread, because if it is really wide, you just, like we mentioned before, you just need to be prepared that when you do want to get out of that trade, it just might be a little more difficult. Doesn't mean that that trade is not going to be profitable. You can definitely make money. I think even when those bid-ask spreads are wider than normal,
Right.
you know, you just have to be prepared that if you typically can figure out a $5 move in the stock is going to equate to, you know, a 50-cent move in the option, that 50-cent move, depending on how wide that bid-ask spread is, might not show you a 50-cent gain. It might only show you a 30-cent gain or something to that effect. Although that 30-cent gain might still be above that 25% profit that you're looking for, you just have to be careful to kind of have those expectations as what they should be if that bid-ask spread is wider than normal.
Yeah, so I have like 20 trades I'm going to do. Most of them are before the election, and you know, half have been confirmed to my satisfaction. So
Right.
so that's okay. That's fine.
And what you're doing is great, right? I think you want to take a stock list, you know, as Josh has here, and then take that stock list, and, you know, we've optimized these to 25%, but some of these are, like you mentioned, I mean, like your Chipotle or your Google, those could be some pretty big movers. So you want to say, okay, well, 25% works 100% of the time or 90% of the time. What happens if I go to 100% profit? Oh, that works 70% of the time. Okay, well, maybe I want to use 100% profit, you know, and just kind of get 7 out of 10 right. And I think that's kind of where you want to try to optimize them a little bit more, you know, to meet those financial goals or the risks that you're willing to take, you know, based on that extra profit that stock might give you.
Yeah. So we'll see.
Yeah.
Tomorrow's my big day. I start.
On the first, yeah. Okay, good.
Yeah.
Well, a lot of them, I mean, I've did a handful of these that have come out, you know, and like Josh mentioned, I mean, we got that pretty big bounce off the market, and you've seen some of these technology stocks like, you know, AMD and Intel and things like that make some pretty big moves and be pretty bullish in this market that we have currently, you know, these past couple of weeks. So, I mean, some of these bullish pre-runners, I just had Intel come off for a profit this morning. So some of these are really hitting pretty quickly too. So, but it does help when you get a little sell off and then you get a big spike up in the market. I mean, obviously those are where your options are going to gain some tremendous value.
So you made money on Intel. I said I was below the 200-day. I wasn't going to touch it.
Yeah, some of them I just jump on them, you know, and like I said, I kind of use some of my personal bias on that one with, you know, I think David spoke before about some of the chip makers and things like that, and just the technology sector as a whole. So I kind of just took some of that bias and said, okay, well, you know, some of these markets are really bullish, even though we're kind of in this little stagnant section before the election. But it just seemed like there was some like that could make some pretty big moves. And I think the options are pretty inexpensive too, all things considered, maybe like 170 or like $200 an option or something like that. So I like those. I like the ones that are a little bit less expensive like that, because I can do multiples. And then to your point, I can get, you know, if I do 10 of them, I can get out of 8 and then I can leave 2 in there. And I think those Intel options were either like November, those were November 20th options. So I still have tons of time on those options that I have left over to see if I can catch a more of a spike up in the market, you know, so, and still have a profit, kind of a free trade, if you will.
Yeah, thanks.
Yeah, no worries.
This is Dave. I wanted to, by the way, apologize for that. I'm visiting, so dogs in the background are my brothers, and I'm not at home, so. But I want to comment about Winslow's bid-ask, you know, spreads when they're wide. I think that really depends upon the strategy that you have and how much you have to manage the trade afterward. a lot of times if it's not a, if it's a spread or something that, it's kind of like a digital, you're going to win or you're lose based on a direction. I don't really worry quite so much about the bid-ask spread in those cases as much as like the butterflies and, where it's really critical to get out at the right time. So I think the strategy impacts how much criticality I put on the bid-ask spreads when I'm trading. Just wanted to throw that in there.
So Dave, so what do you, if it's a large bid-ask spread, that means, the volume and open interest is going to be very, very low, under 10 possibly.
Well, that's very true, but it depends upon, like I say, if it's like, say, a bull put or something, and I'm like just selling the bull spread below the market, as long as I get in and I'm okay with the, my profit margins or whatever, then I don't really think I'm going to have to manage getting out. So if I don't have to manage getting out, I'm more willing to put on the trade that way, even if the bid-ask spreads are large. I'm really, like Shawn just said, I'm really applying my bias to that trade more than almost anything else. So it's like, okay, if I can get in at what I think is okay price, then, and I don't worry about getting out, then I'm a little more liable to just ignore if the bid-ask spread is larger than I'd like, so to speak. I don't know if that answers your question or not, but it's a feeling kind of thing more than anything else, and have my bias toward that particular trade.
Well, yeah, my biggest thing is like if I see 0 on that strike price, I mean, for open interest, I mean, what's the chances of getting in and getting out if you're the only one?
Well, if the trade ends up expiring worthless, it doesn't matter, does it?
Not, well, yeah, if it expires worthless, but if you're doing a bull put and the risk is $1,000 and you can't get out before that.
Yeah, I understand it. It all depends on the particular trade that you're thinking about and your strategy that you're working, et cetera. So it's I understand that I wouldn't do it on a lot of cases. I'm with you on probably most cases. It's just some cases that I figure like, well, I'm just going to ignore the bid-ask spread because I kind of think I know where this stock might be going or whatever, and I'm going to put on a trade that's biased in one way or another. And as long as I'm right on kind of like my overall thesis, I'm not going to have to manage getting out. And so that's the indecision on my part is whether if I have to manage getting out, then I'm more critical about the bid-ask spreads. If I really think I'm really not going to have to manage this, then I kind of ignore them to an extent, to a great extent, I guess I say.
Yeah, Dave, it's Jean. I agree with you. I think that you have to look at your expiration dates too, because if you're going very far out on something, you're not going to see hardly any volume anyway until it gets closer.
You're right, Jean.
Yeah, I mean, so that's and I agree with all that. I mean, you just want to. It's a case by case basis, and really the main thing is just be careful. Just kind of know what you're getting into and kind of have a plan that goes back to that as well. Of just being prepared not to possibly get what you might think might be fair value. I'll show you just the Regeneron example real quick on the other screen. And you can kind of see. So Regeneron's one that comes up, a bit within Delphian. I've traded it before in the past, and I remember trading it, and that's my specific example based on the bid-ask spreads, right? I'm looking at Regeneron here, the October options. Now you can see, the stock's at 570. So if it comes up with with some type of bullish signal, state 2 target 3 or a state 1 transition, if I was looking to buy, for example, if I was looking to buy this 95 call, let's say, the bid-ask spread here is $2. I mean, you're talking about the difference between it is $2.60. So you're talking about almost a 25% difference between your bid and your ask on this particular option here. Now, my open interest, like we talked about, is kind of like 12. I might try to stay away from, I might do the 108 or the 398. But you can see that, you know, barring these being equal, you know, if I'm looking at this option here and I pay, let's just say $8 for it, and now look at it, it's 5 to 10.10. But let's just say I pay $8 for that stock, for that option. If the stock moves up $10, so now I'm looking at a 585, my option should be worth between 950 and 1120. But, you know, if I pay $8, where do I put my order in to get out if my bid-ask spread is $2 wide between 960 and 1120? I have no idea. You know, I want to say, hey, let me try to get out at $11, but that might not be valid, right? The stock could move up $10 and it might only be trading at 980, and I'm trying to get out at 11. So I'm $1.20 away, which is almost 10% away from the current value of the option. So you just have to be prepared in that case. You know, if I paid $8 for the 595, but it's only telling me they're going to give me 960, then maybe I have to be happy with that 960 if I want to get out of it, you know? So that's what I mean by being prepared and have that plan and say, okay, I'm okay with that. You know, they're ripping me off probably $1 on both sides, but I'm okay. You know, I made a big move. Regeneron can be up pretty quickly. I can get in and out of for profit pretty fast. So I'm okay kind of giving that money away if I have to.
Yeah, another good example of this, like if I'm using an option strategy to try to acquire stock.
Right.
And at that point, it's like, as long as I'm getting an immense amount of premium to start with, and I sort of want the stock either way, and my strategy is not going to be terrible either way if I get it or you don't, then I don't care. You know, I just, okay, I'm going to take the result however it is. I might get the stock, I might not, but I've taken in a lot of premium, and therefore the bid ask is sort of in my favor when I'm putting on the trade, maybe to an extent, and then I don't care. So maybe that's a good example of a type of trade that it doesn't really matter so much as if you're trying to acquire the stock with an options trade, then you know, don't worry about the bid ask so much.
Right. No, I don't disagree with that. It depends on your strategy for sure, and especially if you're buying options, you know, such as these Regeneron options. You know, I mean, settlement on these is going to be a little bit different from what I experienced past with commodities. But you know, if you pay, let's say this is all the trade that you wanted to do, and you pay $8 for this option, and let's just say you wanted to do 10 of them, so you paid $8,000. You know, that option could easily settle at $6 tonight when it settles, and now your account that you just looked at went from $8,000 to $6,000, and the stock didn't even move. It's just based on settlement of where they want to price those options at on the close, right? So that's another negative thing that can really, you know, discourage you from doing those types of trades, because you're like, wow, my account value just dropped, you know, $2,000 off of nothing. And so that's another thing that you want to make sure you're looking at, you know, because it can happen. Settlement of options happens every night, and they can settle them way out of your favor depending on how big those those bid-ask spreads are. So that's another one. And it's not anything that's, you know, taking money out of your pocket. It's more psychological at that point, I feel, and it could be very discouraging in my opinion.
How does this one become a liquid option if the bid-ask spread is wide or whatever? Where do they come up with it?
Yeah, I think we've talked about it before, just that liquid options list needs to have some updating going on. But yeah, I mean, some of these aren't as wide. I mean, if you go a little further up, you can see, I mean, this one's still what, about 25%, but some of them, you know, some of these definitely should be probably reevaluated and taken out of the list if we can take them out. Because sometimes it looks at some of these other ones. I mean, some of the further out ones, I think, aren't as wide, possibly. If you see some of these, I mean, some of these in the money ones are going to be what they are, but some of these aren't as bad. I mean, this one's pretty bad, $6, and you're looking at a $15. So, but some of these should be taken out of that list if they're still in there. But we just got to reevaluate that and get some of those out of there.
Is the criteria like 5% of the stock price?
I thought we used 2%, but
2%.
2%. So maybe at that time the options weren't as wide when we did that. But yeah.
I mean, like if you think about $2 from what, 570, it's pretty small, right? What is that?
Oh, $2 off of the stock price. Yeah.
Yeah.
Gotcha.
Yeah.
Oh, that's what it's using. It's using the difference between the spread versus the stock price.
Yeah.
Oh, there you go. So that's why. Okay.
And
For some reason, I was thinking the difference between the spread comparative to like the bid or the ask. That's why I was confused.
stock price. And I mean, as we get these new 4,000 symbols, we're gonna have to update the liquid options list. So, Winslow did a good job helping me with that. I've kind of held off on it just because we have so much coming here with that 4,000. So, so I was just waiting for those just to do the grand list. And, once we get through all that, we'll ask for input too. I mean, it'll be a pretty big list, I would think. But, yeah.
Cool. So you can see my Delphian screen now, right? I switched it back.
Yeah.
Okay. And I think, Gail, you asked about, so is it, before I go on to that, does anybody have any questions about, the earnings plan, converting that stuff if you need to, kind of trying to figure out a flow? If anybody needs a help figuring out a flow of the best practice to use the earnings plan, let's get together and we can kind of construct one together and push that out to the group. So, but no questions. All right, cool. And then I think, Gail, you're the one that mentioned Costco last week, right, for the Vol Crush trade?
Well, no, I did Costco as an earnings fly, but I don't think I talked about the Vol Crush.
No, that's what I mean, the earnings fly. That's what I mean, the earnings fly.
Yeah.
Okay. Yeah, you mentioned it last week, right? Because it wasn't on my list because of how soon it was. I did my list mainly just after like October 14th. But so you did do the trade?
Yeah, I did do the trade. Yes, I ended up closing it on either Friday or Monday. I did it for the second week out, and I ended up closing it. I think it might have been Monday morning or something like that, and got it because it moved right back at almost right at the range. So it was good. It was a good trade.
Good. Yeah. And I did it as well. And so I'm glad you're able to kind of back that up also. So I did it about the same. I'll show I did the October 2nd trade, 325 to 345, 365, and I collected 1330 with a 670 risk. So I collected 1330, I had 670. So just shy of that 2-to-1 risk to reward ratio. And then I did the same as you with the market, or I don't know if you did this, but what you mentioned, the same, kind of uncertainty of the market and the weekend and what was going on. The Friday profit looked pretty good. So I got out for, I think, a little over like $8.50 or something like that on Friday. So I didn't want to take that.
Yeah.
Say again.
Yeah, I did the same thing. I closed it with, I think I collected like 1170 as the premium, and I closed it at 8. So I was very happy with it.
Yeah, and I think the only reason I collected, I don't know if we did the same strikes, but the only reason I collected more was similar to the Facebook, that one, when it was mentioned in the call and I looked somewhere and then it said earnings was that next day. So I did it right after the call, and come to find out earnings wasn't until the following day. So I was actually ended a day early. So it gave me a little bit more of a credit. Yes.
Shawn, I did the same thing.
Did you?
The same
Okay.
thing. I did absolutely the same thing. And I looked at it on, I was watching the trade, and I'm going, gee, the volatility is not rising at all. The next morning I looked at it, and the volatility never dropped. I went, oh, crap. I got into it a day early.
Right. So I did the same. So, and then I looked at it, and I was like, what's happening? And then nothing. And I was like, oh, okay. Well, I think I was comfortable with the way it kind of looked and the different things that particular stock was showing. So it's like, it's not a big, it could be worse, it could be better, but it could be worse too. So I was like,
yeah.
So.
Yeah.
Well,
I also went out the extra, strike or two, on either direction. So I think my thing was like 17 or something like that, 17 and a half or something like that. So I guess it was 15. It looked like it was 15 by toss was the market, market makers move. And so I went out to like 17.
Okay. So yeah, that's why your credit might have been a little less than mine, because I did $20 wide. So I did mine a little more wide.
Okay.
But yeah, and that goes to show, I mean, I had my order working to get out at that 40% profit, a little bit less than like the 863 is what I closed it for. I think I had it for, somewhere around the upper 7s or so. But I'd seen the weekend coming. I'd seen the trade was fairly profitable and kind of working in our favor. So like I mentioned before, instead of wanting to take on that, weekend risk of kind of what was going to happen with COVID and different things in the market, I said, just take the profit and kind of move on to the next trade. So, I still got a really good profit on the trade. It wasn't the 40%, I don't believe, but, I would rather have that risk kind of gone. And I think Monday or Tuesday, I think the trade came back a little bit better in our favor and would have probably got out for a little bit cheaper. But I was fine taking that profit on Friday. Did anybody else, Jean, did you happen to do that or no? I know Jean does that sometimes.
Yeah, I'm here. Yeah, I did it for the week of the earnings, and I got kind of nervous, and so I got out. I only made 150, but that was an overnight trade for me, so that was okay. And I have seen other people get in a day early, Gail, and it still seemed to work out. So it's not always a bad thing, I think, to, make that mistake, I should say.
I'm glad somebody else did it because I was really embarrassed. I wasn't going to own up to that until Shawn said that he did it too. So, because
I think everybody is everybody's done that, and a lot of times it works out okay. I know I've done it before too. I wanted to try to get in for the next week, but for some reason it just didn't fill. I was going to do both weeks, but anyway, oh well. 150 is better than nothing, I guess.
Yeah, that's pretty good, right? If you had a $15 risk, or even, a $15 risk, $150. You're working at, a 10% or so profit if you're looking at the risk amount, right? So, especially overnight, I think that's a great trade. So. Mm-hmm. Yeah, good. Yeah, I'm not, it is embarrassing sometimes to admit those mistakes, but look, I make them too. I have access to Delphian and other systems as well, and I still make the mistake. I did it on Facebook. I think it's like 50-50 if it's going to hurt you or not, right? Sometimes it seems to be pretty fair. That one was pretty steady the day of earnings, but some stocks, like your Netflix or like maybe your Apple or your Tesla, some of those are pretty big movers, and you're going to get a big amount of volume and people coming into that market right ahead of earnings. So, on a Tesla, if the stock's at 400 and, you do those 400 strikes are your short options, and then that next day, that stock moves up 10 to 15%, which is okay for that stock to move. Now your strike should be at 415 instead of 400. So it could have a huge impact on that trade if it's a stock like that can make that move. And obviously any of them can make a move depending on the volume coming in before earnings. But yeah, sometimes it's not that bad, and sometimes it could be, I think. So just be careful.
Hey, Shawn?
Yes.
If it tends to go away from you, say like it's going above your strike price, what's the thought of removing that one leg? If it's going on the upside, just get rid of the put side.
Oh yeah, no, I don't think that's a bad strategy at all. If your put side, so if you have a four-legged spread, so you have a call spread that you sold and you have a put spread that you sold, and the stock does move up tremendously in value, in price, closing that put spread is always a viable trade adjustment that you can make, as long as you know that you're going to be buying that put spread back. So that's definitely going to add a cost to the risk of the trade, right? So you're adding costs to the trade. So, but if the stock does reverse and goes back down, which some of them do, you're able to take that risk completely off the table and possibly make more of a profit on the trade than you originally had thought. So I don't think that's a bad way to make the adjustment. Just be prepared. You're buying it back. So you're obviously, if you collected $1,000 when you sold the trade and you buy that side back for 100, now you're actually looking at a $900 credit instead of a $1,000 credit, right? So again, that's just part of kind of having the plan ahead of time, being prepared to do so. But especially on those ones like Costco, where you're trading that earnings for Thursday and you don't have options that expire until the next Friday, you still have 5 days for that stock to kind of come back. So if you can close that put spread for fairly inexpensively and be comfortable with that risk that you're adding on, or the debit, that you have to pay to buy that back, I don't think that's a bad adjustment at all. I've even done some to where I've bought the let's say the stock moves up. I've even done some where I've bought the put back for really cheap and then just leave that way far out of the money put out there just in case something crazy happens. Because sometimes those puts that are really far out of the money that you bought as protection, you know, they might only be worth, you know, 5 cents, if that, so $5. Now, $5 could be, you know, half of a lunch or something like that. But I feel that having that option in there for $5, if in case something crazy does happen, then that might be a better gamble for me, if you will.
What about changing it to a condor, going further out?
You mean, so then selling a put spread with a further out expiration?
No, keeping the same expiration, but instead of, you know, both being at, say, a sell at 100, now you're going to say 100 and 105 and
Yeah, I mean, I haven't tested it that way, but if I tested it and it seemed reasonable, I don't see there's a problem with that. So you're saying if you did like a 100, 110, 100, 90, so you would buy back the 100 and the 90 put spread, and then maybe sell like a 105, 95 put spread or something to that effect?
correct.
So move your put spread up almost an equal amount or something thereof to the actual move that the stock has seen for that particular day. I mean, yeah, if you don't think it's going to come back, I mean, you're obviously changing the kind of the trade that you're in at that point, because you're adding a leg onto a position that with vol crush you should probably be getting out that particular day on. But if we could look at it and see, I don't see where that wouldn't be a bad idea.
Yeah, I was just going
Yeah.
back because I know I did Qualcomm and another one, and they just moved so far. I says, okay, what could I do now to go ahead and lower the, you know, my loss? I mean, you know, lost $400 some, and if I would maybe take off the wing and leg or change it to something else, it might have been, you know, profitable.
Right,
less
right.
expensive.
Yeah, those are something we could look at to see making those type of an adjustment, even, you know, making an adjustment for that expiration, or maybe moving one further week away and selling the put spread based on that. You know, on some of those, obviously, like that Apple and that Qualcomm, those ones, you know, would have worked perfectly, right? Because those stocks just stayed at those astronomical levels for like weeks. But yeah, it would be interesting to see. I mean, we could probably try to test it somehow and see what numbers we'd come up with, you know, if it did help kind of minimize some of those losses, or at least bring in a credit to where we could kind of reduce those losses, you know, going forward. So.
Hey, and Shawn?
Yes.
It's Jean. And instead of trying to break that trade up, why not just put on another put spread? If you're really sure that it's going to stay up there and not come back down into the put zone, just sell another contract, you know, for a put spread. Even if it was the week out or another week out. I've done that before and collected more money to kind of offset the fact that I've lost on the iron fly.
Right.
You know.
Yeah. And the only thing to note of that, though, is if that put spread that you sold originally is fairly cheap, you know, try to buy it back. But if you don't, and now you have two put spreads, now you just have to be aware that obviously you have double the risk on the bottom, right?
Well, yeah, that's what I said. You'd want to probably do it farther out anyway.
Oh, sorry. Yeah,
but
sorry.
I have done those before, and it
Right.
didn't really help me a whole lot. I mean, way back, not recently have I tried to break the iron fly, because it just, when I did it before, I don't know, it just didn't seem to help that much, is what I'm trying to say.
Yeah.
And unless you can buy it back for 5 or 10 cents, you know.
Yeah, and we'd have to look to see, because really that trade you're trading the volatility crush. So really, if the relative or normal IV is around 50, let's say, and it's at 100 the day before earnings, so we'd have to look to see how inflated are those option prices, and then how much money came out of those option prices the day after earnings. Because if those options dropped 30% in value off of the earnings, just off of the volatility crush, now you're selling a put spread that's 30% less than what it was the previous day. So like you said, it might help you regain a little bit, but not enough based on, you know, what the options were for the previous day or whatever.
Right, right. Yeah.
But it's something to look at. I mean, I'm always interested in making those adjustments. Just like I mentioned before, it's really just about kind of saying, hey, when I make this adjustment, how much money am I kind of recouping? How much risk am I adding? And how is this going to affect me kind of in the long run if I get out, all else being equal? Because I know I've told everybody this before, you know, when I traded commodities, I had one customer that just sold strangles or sold straddles, and his plan was pretty simple. It was, if the stock goes up, I'm going to close my short call, and then I'm going to sell 2 calls, and hopefully those 2 calls I sell will cover the loss that I took on the 1 call. And if it keeps going up, now I'm selling 4 calls against the 2 that I had to close, and hopefully the 4 credit is going to make up for the 2 that I just lost. And he just kept doing it all the way up. And so his plan is
Interesting. Yeah.
his plan is just to exponentially do it, but he doesn't, there's no end game to that. I think the only end game to that scenario is, hey, my account's negative now. Okay, I have to do everything and get out and send you money, right? So I don't know if he had an end game plan. I think his plan was, hey, I have enough money to cover all these losses if it gets to that point. Typically it doesn't, right? But as we've seen with Salesforce or with Apple, it could easily go pretty high before you figure out, hey, now I'm already down, you know, X number of thousands of dollars. So
Yeah.
really just knowing kind of how the adjustment's going to affect your overall trade, and just be prepared that you know exactly what you're taking on when you're doing it. Because the worst thing, in my opinion, is to make a trade adjustment and then lose more money than you thought just because you didn't have it figured out prior to doing it. Because it can happen in the heat of the moment. You can make a mistake, you know, or you can do something that you might, oh, I didn't account for that extra risk, and now you just lost, you know, 2,000 when you thought maybe you could only lose 500. So
Yeah, true.
I think we need a class just on that.
that's fine. Yeah, I mean, I love talking about that because it is a crucial piece of trading, is just having that plan. Because I mean, I've done it to where, you know, you get out of a trade and you're like, man, why did I do that? I should have held on, or, you know, not held on because I could have made more profit, but just, you know, I saw this happening, and why did I make that rash judgment to get out? And the only reason I made that rash judgment was because I didn't have something written down of what I was going to do in X scenarios. And if I did, then my mind is calm. I'm able to think clearly about it, and I can put it down and follow it. But if you don't, you're just more apt to make those mistakes, and then think about it. Now, if you think about it, readjust for the next one, come up with a plan, and kind of do that going forward, it's great. But if you keep obviously making that mistake over and over again, but just in different ways, you're just repeating yourself, right? And you have to try to fix it. So.
Yeah, I wanted to say something to Gene's point there, is that if I've missed, or my you know, the time frame has gone by where my trade thesis didn't work out, instead of trying to redo the same trade to, you know, do it better or whatever, I find that that's the time to change your strategy. And if you got hurt with the original trade idea you have, quite often I find that, well, if I just change strategies now, then I have a better chance to not make up, or I'm not trying to reduce the risk. I'm trying to adjust my trade strategy that was wrong to when it's right, with now the right kind of moves in IV that would help my new strategy. Like if you miss the iron FI and the vol crush, well, like you just said, the vol crush is already over. So now if I was wrong, now maybe go long and put in a long call or something like that, or buy a long call. Changing the strategy to the other, you know, almost 180 degrees sometimes is real helpful if you've missed out on your original trade thesis.
Exactly, because you could even do an iron condor, you know, way above where it went and below, if you thought it had finally reached its peak, though, you know. Otherwise, on those vertical spreads, those put spreads, I have rolled them at different times, you know, just to collect, but not an iron fly. I never broke one up to try to roll or anything. Just the vertical put spreads.
Right. Yeah, I mean, and there's always adjustments that can be made, and that's the beauty about the system, is it's a little difficult to kind of make some of those adjustments in the system, some of those more complicated four-legged adjustments, but we can do it. So if there's ideas like that, let's put those into play and try to test them and see if we can, you know, come up with ways to make some adjustments and see how it would work over time. So cool. Yeah, I mean, the vol crush is still valid. I mean, as with all of these different earnings, you know, definitely kind of run through them if you can, get used to using them. And if you find some good trades in there, you know, albeit not ones that might be on this earnings plan that we have put within the system, there's going to be some there. So if you find them, test them. And if you're comfortable trading them, then trade them. So I think we still have a lot of good trades there. The other thing I wanted to show you guys was, so some of these I haven't, you know, like we'd mentioned before, I've traded some of these vol rise trades before in the past, but I've noticed some of these coming up recently. You know, this TSM, which is that Taiwan Semiconductors, United Airlines, you got Goldman Sachs, I think, and then you got United Health Group here. So we have a handful that are coming up, you know, to do these vol rise. So I just want to make sure that if it's a strategy that you haven't traded before, or maybe that you just wanted to kind of see how it plays out, definitely take some of these and put those in that virtual portfolio. We've talked about it a couple times before. It's not overly difficult to put them in there. So if you see something come out, excuse me, like Goldman Sachs, and you wanted to put that in the virtual portfolio on 9/23, just go ahead and go in there and add it. I already added the Goldman Sachs to my virtual portfolio. Let me show you real quick. So if I go in here and I come to my organizer, virtual portfolio, I added Goldman Sachs in there, and I added it into this one. I did both. So I actually added the long strangle, and I added the long straddle, and I did both of these based on the information that we have, you know, in this Google Share Drive. So if we go into the Vol Rise and you click on that Google Share, you can see that we have the trade set up right here for the long strangle. You know, we have the upper lower standard deviation, and then for this, for the straddle, we have the same thing on the other page, but you're using essentially you're going to use at the money options. So, but put those in there, and you can see on 9/23 is when the signal had come out. I went in and I went back in the calendar. I went to 9/23 and I added it, and then I kind of follow it along the way to see how it's gonna, if it's gonna produce any results or what it's gonna do. But we can see this United Airlines, $36 stock. It came out on 9/24. So I'm going to show you how that I would add that in there. So if I go into the system on 9/24. Give me 1 second, sorry. I'm going to go ahead one day to 9/24. It's going to change my values for this, but I want to add a position in here. So we know it's UAL, and we know we're going to be doing the vol rise strategy. So we're doing a long straddle or a long strangle. If I type in UAL, and again, this is 9/24, I want to first do a long straddle. It doesn't matter which one you do first. I want to do both because I want to kind of see how they work out. So if I do a long straddle, so here's my long straddle. I'm just kind of, you can go into your option chain and pull out the option chain to see exactly which options you should be doing. I know we're looking at about 60 days out, so I'm going to go to the November 20th options. And since we're doing the straddle, we're going to be doing options at the money. So if I see that the stock is trading, you know, right here it shows open 32.78, close 32.74. I'm going to do a straddle. So I'm basically going to use options that are at the money. So I'm going to use, you could either use the 32 or a 33 at this point. I'm going to put 33s in there. And we can see that if I do a $33 straddle on UAL for November options, it's going to cost me around $810. Also shows me my break even. Since I'm paying $810 for the spread, or for the strangle or straddle, excuse me. Sorry. Since I'm paying $810 for it, you can see my break evens are $24.90 to the downside and $41.10 to the upside. Those are my break evens. I'm typically not going to hold this trade to expiration to where these break evens are going to matter, but it does show me those break even price points there. I can add it. I can hit create by adding it to my portfolio, and it's going to be added. And then we'll be able to see the position UAL is right here. Now I would want to do the other one also. So I'm going to show you again, go add position. And I'm going to do UAL. Oh, sorry. UAL. Long strangle. I'm going to do the same. So I'm going to do the November 20 options. Now this is, so the long strangle though uses the upper and lower standard deviation. So now I'm going to use the upper and lower standard, one standard deviation right here. The low side is 2387 and the upside is 4490. So this means one lower standard deviation is 2387, one upper standard deviation is 4490. So what I want to do is I want to be inside both of these points with my strikes. So for my call side, I'm going to use the $44 call because it's going to be within the standard deviation ranges. 44 is the next one down below 44.90. And then one above 23.87 is going to be 24. So I'm going to use those as basically my options that I'm looking to purchase. We can see here our break evens again. If I hit create, it added that position to my virtual portfolio. Now, the reason that I show you this is on Goldman, on UAL, so on United Airlines, it's a little bit different because the value of the strangle or the value of the straddle is fairly reasonable. The value of the straddle as a whole is going to cost me about, we said $810. So not a huge amount of risk. I'm comfortable taking on that amount of risk. But if I looked at one like the Goldman Sachs that added below the straddle, which is at the money options, if you look at these two together, my risk is roughly $1,300 or $2,300, right? So that might be a straddle that I do not want to put into my account just because of the value of the risk that I'm taking on to do that. I don't plan on holding the options all the way to November, but I still say, okay, well, worst case scenario, I could lose $2,300. That's a little too much. So I might want to look at the long strangle for Goldman, and now my long strangle, the cost is about $600. So you can see that the cost on this one versus the straddle versus the strangle, there's a huge disparity there. So that's where I might want to look at one strategy versus the other based on risk. So,
Hey, Shawn.
Yes.
Hey, just for this strategy, the way it's designed, you're getting out before earnings. So obviously you can hold it as long as you want, but the strategy design is, you're getting in like 7 days before and getting out before the earnings release because you don't want to deal with that vol crush for,
right.
for
Right.
this strategy, the vol rise.
Right, exactly. And you're really looking just for that volatility rise in those options. So, to Josh's point, really, it's hard for me to, I think there's probably a way you could figure out, out of that $2,300, if I hold it for 10 days, approximately what's going to be my risk, what's the amount of money that I could lose. But, if everything goes wrong and the market does a correction or something that affect, this could drop substantially. So I might not want to have that much of a debit in my account, even though my risk isn't going to be that entire amount because I know I'm getting out in 7 days. So, yeah, that's just something that I look at for myself. But yeah, typically you're out of the 60 days of expiration, you're holding these things at most 20 days based on some of those back tests that we've done, right? 20 days, I think, is the most you're going to hold it. So you're still going to have 2/3 of your option expiration or your time decay left in those options in theory. So if I put these trades on 923 and 924, if I just come up to current day, this is just going to show me up to 929 for the close of last night. We can see that both the long straddle and long strangle for the Goldman trade, they're both profitable. $73 off of the 600 that we paid for this one, and $200 off of the 2,300 that we paid for that one. And then you can also see the United is slightly profitable for the straddle by $53 and down a little bit of money on the actual strangle that we did. You can also look over a little bit here, and I like to look at this, which is your return on capital. And you can also look at your risk percentage or your return on risk. So we can see that based on the amount of money that I put at risk for the straddle for Goldman, you can see I'm up my risk, was 2.35. That's just based on my total portfolio size, but my return on capital is 8.5%. The strangle, the return on capital is 12%. 6% on the long straddle for UAL, and down basically 7.62% for the strangle. So I think this is just a great tool for you to go day by day and see some of these trades progress and see how they would work out and say, okay, well, you know, maybe I'm comfortable taking on that debit of $2,300 for the long straddle for Goldman, because I know, you know, come expiration, you know, I might be down 10 or 15% in the worst case scenario. But I think this is a great tool that I just want to make sure we're using to follow some of these trades, because I haven't traded many of these, but I'm using this to follow some of those as well, just to kind of see how they play out over time and how often, you know, they're working in our favor. So,
Hey,
Yeah,
Shawn, did any
Yes.
of them hit the profit target yet?
there is a way to do that, right? How do we do that?
It is day by day, you gotta look.
Oh yeah, so 12. I don't think so, but let's go back one day.
Because I think that Goldman, like,
That Goldman might have, yeah, right? So right there, it's 285. 285 is 12%.
yeah, it seemed like after the first day that Goldman would
Should have spiked up quite a bit.
Mm-hmm.
There's 155, so it doesn't look like it.
yeah, I wanted to
Josh?
say that.
Josh?
Yeah.
Hey, this is John. The way I do it is I grab the graph and then I see the graph where it peaks up.
Mm.
All the graph down below, or look at a different graph?
You
Okay.
click on the strategy on the left and go to current day, you can see.
So like the long strangle.
Yeah.
Yeah, I was going to say I like Shawn's tool, if you will, and it's especially effective if you're trying a new strategy and you want to see how to trade manage that strategy by using the trades, you know, your portfolio and following that day by day, because then you can say, oh, I should have got out here, I could have got out there, but it was better if I'd have chosen, you know, it'll help you learn to manage a new trade strategy by using the virtual portfolio. I think it's a great tool for that.
Yeah.
Yeah, and here's the chart here. So I pulled up this.
Yeah, it doesn't look like it hit.
Nah, so
It was close.
yeah, close. Yeah, especially on that spike up there. Yeah, and the one thing too, I don't have it here, but I would want to kind of look at it is if I could look at, you know, since we're talking about a vol rise strategy, if I could look at some type of IV calculation that will show me, you know, the increase or the decrease in the implied volatility for that particular, you know, stock or that particular option would kind of show me which way that might be moving. I'd have to look to see if that might help or not. But it would be interesting to see if we could have it. But yeah, I mean, this is great. And these obviously, you know, if we're looking at the gain, most of these, you know, as of right now, 3 of the 4 have a gain. So the gains are easy. You can say, oh, wow, I'm up money and everything would be great, right? But I think really when this kind of comes into play is when you're actually down money on the position. You're like, okay, what would I do now? You know, how would I react emotionally and psychologically? And, you know, actually, how would I react to this position being in my actual account? Would that much risk or that big of a drop in the value of the actual options deter me from doing this trade? And if so, maybe I want to look at how the trade's constructed, how much risk am I taking on, what's making me feel that way, and then maybe this is just not the type of trade I want to put into my account. So I think it's just a great learning tool, you know, across the board. So use it, please. You know, use it. Look at some of these trades. You know, we got some coming up. Not many, I guess, coming up on that vol rise section, but some of these, I think we can do some of these with like these bullish runners, even these non-movers. So it's great for some of those trades that you typically might not want to put in your account because you're buying a call and buying a put, or you're selling a call and selling a put. You know, so you can see those that have that big type of risk and how do those affect my portfolio and how are those moving on a day-to-day basis. And you know, I haven't done that short strangle or short straddle before, but maybe I want to. And then when you put it in the virtual, you're like, okay, I definitely don't want to because of the risk on that particular position, you know. So those are the ones I think you're going to see some more of the value to it. So, you know, and if the stock if I'm in a short strangle and the stock moves up in a big way, how am I going to handle that short call that I sold? Do I just get out of it and take that loss, or maybe can I roll it? And what happens if I do roll it? So all of these are just strategies and adjustments that you can use in this virtual portfolio. So, you know, in my mind, this thing is super extensive with the amount of data that you have access to. So, you know, definitely use it. You don't have to use all of the data because, in my opinion, there's a lot there, but I think all of it's very valuable for you to be able to make some really good decisions and adjustments, you know, in your trading. So, any questions, anyone? No? Good. Yeah. So go back in time, add the positions back in time. I mean, you can go as far back as the system goes back to add positions to the virtual portfolio. Obviously, for these earnings plans, we're just using the ones for this particular quarter or the quarter coming up. But use it. I mean, and like you had seen in mine, you know, I have multiple portfolios set up. So if you want a portfolio that just shows those vol rise strategies, you know, just put earnings Q3 vol rise, and then earnings Q3 bullish runners or pre-runners or whatever, and you can have a different portfolio for each of those particular segments, and you can see, you know, based on that one portfolio, how that actual strategy is working and kind of, you know, which one based on the risk and things like that you would prefer to trade. So yeah, if there's no questions, that's all I had. I wanted to kind of show you guys those things. The Costco trade, I think we have a couple coming up. You know, nothing really looked super great over the next couple of days, but keep working the system, using it, and any questions, make sure you reach out to us and, you know, let us help you. And if you have any constructive ideas of what we can do, make things better, please put it in that feedback section. That's definitely the one thing that Josh hits on first every morning with Ashok when we have our meeting. So any stuff that you put there, Josh is bringing to Ashok's attention and the coder's attention to try to get that stuff implemented for you. So it's a great tool that we've added for you guys to use. So please make sure you're using that too. And yeah, thank you guys for your time. I appreciate it.
Thank you.
Yeah.
Yeah,
Thanks.
thanks guys.
All right. So, so we didn't have much else to cover. We kind of flew through it. So I'll just open up to general questions on platform or anything like that in general. You guys have anything?
We do a good job.
Anyone?
And then, like I mentioned too, real quick, you know, Sudhir had shared, he's not on the call today, but Sudhir had shared his file that he converted from PDF to Excel for the earnings stuff. So I'm just kind of going through it right now and trying to sort it and see what it is. But once we get that available, if Josh is good with it, maybe we'll add something like that to the shared drive. But again, the dates on there, the earnings dates are going to be static. They're not going to change if Zach's or somebody else changes their dates. So that's the only kind of negative that I have to that file if we produce it, because it won't, those earnings dates won't change. And as we know, they've been changing a lot lately. So
Yeah, hopefully that doesn't persist past the election, you know.
right.
But yeah, so I mean, the way to get the most updated is going, and everyone has this, right? Is able to access this earnings plan. Is to go in here because those get automatically updated each night. So you can sort it by the next earnings. That's probably the best thing we have. I think they fixed the price, or yeah. I'm not sure. Yeah, and by symbol. So they fixed these searches. So, you know, basically you just have to sort by next earnings, and you know, the earliest it would be is 20 days before the next earnings for like the bullish pre-runner. But so like this one, Citigroup is today. And, you know, these ones are earlier because they're, you know, longer time period. So, you know, if you just sort by that and look at the first couple pages, you should see everything coming up in the next week or two. You know, to be safe, I would just go 2 weeks from, you know, the current, or 20 days from the current. So that'd be, you know, you want to look to like the 30th, basically, of October for, any possible 20-day pre-runners. So like here, the first 7, and you can see all these trades here. So after that, you shouldn't see any entries, within the next few days. So, but yeah, I was trying to get them to sort by this column, but it's not functioning properly yet. So, okay. And we're also working on creating an alert up here, because, right now if you can go through basically the file that we have and pick out, in this, your favorite movers or pre-runners or whatever. And then you can go in and create the alerts so that they're on your system just by finding them, clicking on the strategy like this, and then hit the alert over here. Mine's a trash because they're all on this system. But you have a little bell here and it'll create the alert, so you'll get notified out on your system. So, okay.
Josh, one thing, since these are, when you create the alerts, they're stored somewhere in your system.
Yeah.
But we can't, there's no way to pull up all the outstanding alerts that we've saved, right?
Yeah.
Oh, how?
Okay. So when you create an alert in the system, and that's for the daily alerts that we did today.
Right. Uh-huh.
So it's in the organizer. So if you scroll down, it's it's a sneaky one here.
Yes,
That's
I
why
know,
we
yeah.
made it yellow. So here's all your like daily watch list. So
Yeah, but will that show you everything that you've actually saved? It's not something that's active right now, but something that, okay.
yeah, I have 337.
Okay, but you can't see them
You can,
specifically, right? Can you look at them? Can you pull them up?
you can pull up the criteria here. So,
Just the criteria, but you can't see what stocks you've got and that sort of thing.
well, like this one, it's state 2.
Right.
So it gives entry, exit, and all the symbols.
Those are your stocks. Okay, thank you.
Yeah.
Okay, that's what I was looking for. All right.
Like, the earnings ones are a little different. It just gives you basically what strategy it is. If you put Google in there, it just says non-mover. So let me see if I can, and you can search, I think, so it gives you, that's the entry day, one day after. But you can also search here too, like if you have 300 like I do. You can search by symbol too. I think that works. Yeah. So it just gives you, your entry criteria. It doesn't have all the testing data here, so. But that's where they're at, and you can delete them. So if you have, like I had I did that earnings plan, like a mock one last quarter. So I deleted all those alerts, and then I created these, me and Shawn created these 300 something for the current earnings plan. So each quarter we'll go through and delete everything and then create them again. So, because the days may change. Google may go from 17 to 15 day for the entry. So we'll do that each quarter for all you guys. But that's where they're at, and you can delete them if you have a bunch in there. So, any other questions? Has everyone been starting to trade these earnings live?
Tomorrow.
Tomorrow?
Yeah. Yep.
What's tomorrow?
Polte, Netflix, and Granger's.
Oh, forget Granger. I've had look at Polte and Netflix. So good.
All right. Well, that's good. I mean, I think the market wants to cooperate for the bullish pre-runners right now. So, hopefully it doesn't turn around. So.
This is Chuck. I've been doing the bullish pre-runners.
Yeah. Okay. Any problems?
No, no problems.
Okay. Yeah, I haven't tracked these. I think me and Shawn just need to, track each one of these. I know Sudhir's, he would give us a really good, thorough update. He said he's trading everything. So I know he did these two and they both worked. These bearish, I haven't traded these myself.
Yeah, I think he said he was a little skeptical on the long side because he's kind of got a bearish bias to the current market just based on the election coming up. But I mean, to Josh's point, before COVID happened, he was trading pretty much extensively all of the bull puts that we had in the studies and throughout the system, and he had really good results using them. So he's pretty active in the system, and he's been using it a bit. So
yeah, so that'll be our project, just to create these virtual portfolios that we can share with everyone.
And then like we spoke about last week too, real quick, he was the one that had mentioned, using the seasonality and using it in reverse, so saying something typically moves X percentage during this time frame, but what about stocks that don't move a certain percentage within the time frame? And he is the one that had called me and found like a Walmart and found like a McDonald's and some companies like that typically did not move in price within the next 20 days. And, it made sense that a Walmart wouldn't move a certain price in September because you really don't have much happening within September. You have, I think we spoke about it last week, you have Black Friday coming up, but that's all the way out till November, if that even happens now. But that being said, some of those stocks that he had talked to me about, I worked and did some of the iron butterfly trade on those stocks. So selling at the money calls and at the money puts, and then buying options one standard deviation out for protection. And some of those trades with those stocks just barely moving over that time frame, that value of those at the money options depleted, and I was able to kind of capture some profits on those. So those are some strategies that he's kind of looking at and trying to use the system in a different way. And that's what, Josh and I kind of speak about a lot is, see some of the screeners, but just think about them kind of in that reverse order or in a different way, and you might be able to find some really, really great trades. So.
Yeah, I think we can cover that next week when Sudhir's on the call, because, it's always best if it's someone's strategy to have them on the call. Like when Lee did that initial one for the bull put seasonal, I think, since he'll be on the call next week, we can just cover it then, I think.
Yeah, definitely.
I have a question for the group, kind of a generic question, but does anybody out in a group here follow, like as a group, like the work from home trades? I don't. I follow tech and kind of energy more than anything else as smaller groups. But I was curious as to if anybody's watching that particular group, if it's changing as we're getting closer toward the election date. Maybe nobody is. I'm just curious if anybody is.
Well, not necessarily the watch from home, but I am with an IBD group and do an IBD live each morning, and they are strictly looking at the growth stocks, and mainly in the growth stocks are these stocks that have benefited from being from COVID. And they have you're down just recently in the last week or two, but they have had an amazing run up.
Is that due to the expectation of a stimulus package finally being approved, do you think?
I think they're back on the move again, and a lot of these are the tech stocks. They're back on the move again, and I think it's in anticipation of a stimulus. Yeah. But they were. I mean, if you go back and you look at them from March, when we started coming out of that, that V-shaped recovery, it was a lot of these growth stocks that just did incredibly well. Huge gains.
Yeah, I agree. Yeah.
Yeah, I think it would be almost political suicide for one side not to pony up for another stimulus at this point. So I don't know when it'll happen, but I mean, it'd be either side not getting it through, you know, that would be pretty bad for their election hopes, I would think. Okay. Any other questions or comments?
Thank you, guys.
Okay. Thank you all.
Thank you.
Thank you, Josh and Shawn.
Thank
Thanks,
you.
everybody.
Thanks,
Yep.
everybody. Have a
Thank
good
you.
one.
Thanks.
All right.